Hi, everyone. Welcome to our vlog. Today, we're going to talk about deducting business expenses versus personal expenses.
Yeah, this vlog is set up for small business owners. And if you like this content, please like and subscribe to our YouTube channel. So today we're going to talk about what are personal versus business expenses and deducting those. And I think the first step is determining what are business expenses, right? Let's define a little bit about what those are.
Yeah, so a business expense is something that's ordinary and necessary to run and operate your business. So that's a definition by the IRS that's pretty broad, right? So you can have, one company that has expenses that are much higher in a related area than another company in a different industry, but for each of those industries, that may make sense.
Mm-hmm. So, absolutely. I think that there are instances when there is a set of expenses that most small business owners incur. Right. All right. So that could be software costs, it could be telephone, it could be rent if you have a brick and mortar, things of that nature. Most small business owners incur some similar expenses, but there could be unique, special, industry specific expenses that you need to be aware of, and it may not be in another industry. So, capturing that and understanding that you need to capture that information is really important to, helping reduce your taxes as well as get a good gauge as to where you're spending your money.
Right. Yeah. So, I mean, when you kind of think about it, it almost seems too easy. Like, if you spend money for your business, that money that you spend, those expenses should be captured as business expenses and deducted for you for tax purposes, for accounting and management purposes. But some people, we still get that question all the time. What's business? What are the types of business expenses? So you kind of got to take a step back and say, okay, what are the costs that I need to incur to run my business? Mm-hmm. So, for example, somebody who's in a medical profession, they need licenses and mm-hmm. certain insurances and certain education and conferences and keeping up with those kind of things. You may not think about that, but all those things that you had to incur to get your business started and to operate as that medical professional would be deductible.
Absolutely, and I think that you may also look at your industry. So for instance, I was in an IRS examination. I helped somebody who was in an IRS examination, and the IRS agent said, well, this real estate professional has, some gifts and expenses to clients. And she wanted to know why. And I said, well, any successful real estate agent is going to provide their clients with usually a small gift or token to, as a congratulations on the day that they settle. Right. And this is normal practice for this industry. And the IRS agent agreed with me, and that item was no longer on the table for further examination. So, it really depends on your industry and what types of expenses are typical. Some expenses, such as meals and entertainment, are heavier in certain industries because the person has to go out and sell and network and meet with their clients on an ongoing basis.
Yeah, I mean, we get that question all the time. What is a typical level of expense for my industry, and typically we just say, it all depends on what you actually are doing, right? And but there are certain industries that have higher expenses in certain types of expenses, right? Just like you said. But there are also expenses that you have to incur, but you may not get 100% deduction for. Mm-hmm. So your example of the client gifts Well, client gifts are maxed out by the IRS at $25 per person. So even if you spend $100 on a gift for somebody, you've incurred that $100 that is expense that you would record in your accounting software, but you only get $25 for a deductible expense on your business. For your business. So, there's other varying, there's other types of expenses similar to that, or have different accounts.
Yeah. We've had a client who was opening a new brick and mortar office and decided that they needed some decor in the building to help, make it more homey and more appealing. And they purchased some artwork that was not super expensive, but it was artwork for the office. Now, there may be a distinction between that $1,000 of artwork for the whole office versus, something much higher, like $500,000 piece of art, for the lobby.
Right. Yeah. And, so as a typical business, or is that ordinary and necessary for my business? So, a normal, normally you have some artwork or whatever, but it wouldn't come to $500,000 price tag, unless you're an art dealer, or, that is really, significant for your business. It goes to how you are in that type of industry.
Absolutely.
Status.
So we talked a little bit about the types of business expenses that can be incurred. We talked about the deductibility of that, but what happens when there's mixed use, when something is personal and business? What's the best way to gauge that and look for that kind of stuff?
Yeah, so this is a lot harder because you have something that for instance, a cell phone, internet, your car, you may be using it for business and for personal use. So it's going to require a lot more tracking, a lot more discussion, a lot more monitoring as to the amount or percentage of use in your business versus what you're doing personally. So some sort of allocation would have to be done to move or to be able to take those expenses as a business expense.
So, some good examples you had mentioned was like a cell phone that you have in your personal name that you use for business. There could be a portion of that. Things like your automobile, when you're using it for business miles and you're driving to let's say a networking event from your office or from your home office, those are types of mixed use where the asset may be a personal asset, but you use it for business. And it can also go the other way. Let's say the business owns the vehicle, but you have the ability to use it on a regular basis for personal use, let's say over the weekend. There is a personal component to that asset. And so, those things have to be looked at and adjusted for.
Right, exactly. And, the IRS has a lot of different rules about that. So you want to make sure that you're following those rules closely to maximize your business deduction and be able to not have any issues down the road if you get it audited.
Right. So today, talking about deducting personal versus business expenses, we talked about all the business side. Are there some personal item expenses that can be deducted that don't relate to the business?
Yeah, there's not many anymore, at least for federal tax purposes. You're really kind of stuck with what's on your itemized deductions, and that would be medical expenses that exceed the cap set by the IRS, the floor set by the IRS, real estate taxes, state and local income taxes, mortgage interest, charitable contributions.
So
there's not a lot. You used to be able to, as an employee, take unreimbursed expenses from the business that the business hasn't reimbursed you for, that you incurred personally as the employee, but you can't get that for federal tax purposes.
Not anymore. Some states do allow it, but for federal, that deduction is no longer existing.
And that's as of today. So
that could change.
We're talking to today, and next year be
Be
a
different.
whole different story.
And we'll do a different vlog on that then. Okay, so to wrap it up, we discussed deducting personal and business related expenses. We talked about what business expenses are and the definition. We talked about the deductibility of some of those expenses, and then how some expenses are personal versus business and can be a mixed use type of expense. And thank you for joining us today on our vlog. And if you like this content, please like and subscribe to our YouTube channel. Take care.
Thank you, everyone.